God, I got my nephew on here for the first time. He's trying to learn how to trade. So let's be like detailed. Andre, say
Oh,
hi. Say hi to the boss, Andre.
I don't know who the boss is. What's up, Dre? So, trading is great, man. And we have a lot of people in here from OG's group. Well, we the same group now. Pip Core, what's up? Appreciate y'all showing up. There's a wealth of knowledge, you know, between everybody. Even if you don't think you have anything to offer, when you start interacting and dropping your charts and mixing it up, saying what you think is going to happen, you enlighten other people. The power that we have is not with me or with OG, or Marv. You might have people who are comfortable trading the way they trade, but the power is in the group, man. It's in the exchange of ideas and information. A lot of my trades, the idea that I have don't play out. A lot of the strength in my trading comes from somebody who's my antagonist, like Kim. She might see something totally different, or TT, or Rose. Though by you guys dropping your charts and your thoughts, you allow people like me or somebody who's seeing the market from a different side to add information, right? So I can only see the charts the way I see them, but somebody else will see them the way that they see them. And when they drop their knowledge or their explanation of the move, that gives me more insight. And if the trade doesn't go my direction, there's a buy and a sell button. I can just click that sell button if I'm in a buy, and I can roll the other way with it. The faster that you guys get to a point to where you're comfortable with buying or selling, the better off you will be, because a lot of us have analysis and then the trade plays out. The trade is going to do what the trade does, whether it complies with your analysis or not. And if you can see both directions, you can take the trade in either direction. Or if you can see your analysis is not playing out, you can cut. You can limit your losses. And at the end of the day, managing your account is the number one thing. So we trade smart money concepts, or for the most part, the people in this group trade, the original members trade smart money concepts. For those of you who are not familiar with smart money concepts, when you go to YouTube, there are a few different people. But if you type in smart money concept, order block, smart money complex concept, imbalance, fair value gap, you're going to get a multitude of instructors. All right. This guy, Smart Risk, is aligned with the way that I see things. So if you listen to a guy that kind of sees it the same way, whenever I say something or whenever I bring a concept out, you guys who aren't familiar with the way I trade, when you go watch these videos, it'll kind of bring you up to speed. Okay. There are videos on my YouTube page where I broke down things. I broke down a step-by-step way to trade to get 100 pips and get 10% every week. I broke down how to pick your setup on the weekly, get your order block on the 4-hour, get your second entry on the 15-minute, you're going to make 10%. All those things are still true and still valid, right? I still live by that 10% per week. If you can make 10% a week.
Hey guys,
those are great numbers. So if you have a strategy or a way of trading that works for you, I encourage you to stick with it. If you don't have a strategy or a way of trading that works for you, everything that I've done is right there on the YouTube, right? Everything that other people here who have found success, they can give it to you. I always try to encourage people, if you have something that's working, man, come up here and hold a class on Saturday, right? If you don't feel comfortable doing it on Saturday, we meet every day. The swing traders meet every day at 5, right? Except for Friday. Maybe you want to meet on a Wednesday. Maybe you want to meet on a different day and a different time slot. All that stuff is available, man. The group is free, but the group only works if everybody is open to sharing, right? At the end of the day, this is a traders community. We have to create an environment that's conducive to learning. At some point, the vision is that when somebody drops a chart in the chat, we know their resume. Like, we know how they look at the market. So when I see that chart, oh man, that's good to go. I can one over on my personal chart, and maybe it's a trade setup that I wasn't tracking. Maybe it's something that I didn't see. Maybe I don't trade gold, but you guys are all over gold. Maybe I don't trade the US 30. You guys are all over. So in the long run, that's the benefit that we get from a group, man. We have a group with over 700 people in it. It is pretty active, right? With at least 50 or 60 of us are pretty active. But a lot of people, they fall off. Maybe you say something or I say something that they don't understand. They can't follow that theory, right? I even tried to dumb it down with God's plan, right? 100 pip stop loss, 100 pip trade. But ideally, the goal is to teach everybody how to see the market, how to pick out a trade, how to enter that trade, and where to take the trade to. That's the idea. If everybody is a fisherman, then nobody has to fish for the masses. We all can cherry pick our trades, right? Maybe you don't trade on a daily or a weekly chart. Maybe you trade a lower time frame. We don't have anybody who's ever gotten up here and said, hey man, this is how you trade the 5 and the 15-minute chart. This is how you scout. Nobody's ever done that. So there are plenty of opportunities for people to come and share what they do, right, with the masses. And we would very much appreciate that. So let me get off the soapbox. And what I would like to do is start with my favorite man, a little Oliver Velez, because if you're a trader, you got to start from somewhere, right? And I think everybody pretty much that has been trading with me has heard this once or twice before, but I think that it's something that everybody needs to hear every so often. So this video is from a series that he did down in Vegas, everything you need to be a day trader. And some of this is dated, but the crux of the information is never dated. And he talks about the cons of trading. So that's where we'll pick it up.
And this is an area that most people don't ever talk to you about. But let me tell you this. No one in this entire world can ever fault me, Oliver Velez, for not sticking the cons in your face. Every time I grab a mic, every time I've been offered the ability to speak from a stage or a podium or speak into a mic, whether it's from my desk or whether it's for an organization or whether it's for a trading group, for the last 26 years, being a devoted evangelist for this industry, I have never skipped an opportunity to put the cons in your face, because I think the cons, understanding them, is actually more important than recognizing and understanding the pros. Let's get to the cons. Con number one is the most important con of all. The odds are against you. Traders, listen to me carefully. The odds are against you. Traders, listen to me carefully. The odds are against you. One more time, listen to me carefully. You will never be able to fault me for failing to tell you this, for failing to put it in your face, for failing to shout it as loud as I possibly can. The odds are against you. Why? Because there's a 92% failure rate in the short-term oriented trading space. That's right. 92% of every one of you listening here will fail. 92% won't make it, no matter what you do, no matter how hard you work at it, no matter what your intentions are. 92% failure rate, and not me, not any firm in the United States, not any firm internationally, not any expert, not any mentor, not any trader, not any trainer, not any mentor can change this statistical fact. It is etched in stone, 92% failure rate. Now breathe that in, traders. I need you to understand this. I need you to understand what you're up against, because you ultimately, at the end of the day, are going to have to answer this question. This one very, very important question, traders. You're going to have to answer this. Do you understand? You're going to have to answer this. Do I have what it takes to be the 8%? Guys, this is a simple game, but it's not easy. There is a huge difference between simplicity and easy. It's simple. Markets go up, markets go down. Sometimes they go sideways. 3 possibilities: up, down, sideways, up, down, sideways. That's a simple rudimentary mechanism. But I am the last person on planet Earth that will tell you that this activity called day trading in particular is easy. It's not easy. In fact, it's one of the most challenging activities you as a human being will ever pick up. Do you know why? Because in order for there to even be a hope for mastering the market, you have to first master yourself. And let's face it, how many people actually master themselves in this world? How many people actually reach a point where they do what they say they're going to do? How many people really keep their promises to their kids, their wives, their husbands, their community at large, their societies, their personal God? Very few people reach the point in their life in anything where they have accumulated or accomplished self-mastery. But the only way to have any chance at success at this is to first master yourself. You can't take an unmastered you into the market and think that there's going to be success in the market. You can't take an undisciplined you and go find success. You can't take an untrained you and go into the market with your untrained self and think that you and your untrained state is going to pull money out of the markets. Won't happen. You can't be an ill-informed individual and take your ill-informed self into the market and pull money out of the markets. You can't take your unmastered self. You can't take your undisciplined self. You can't take your untrained self. You can't take your uneducated self. You can't take your uninformed self. You can't take who you are right now without changing yourself first. You can't take who you are right now and take who you are right now in the market and expect the market to give you money. So what must happen? You must first change. You must first go through a metamorphosis. You must first become educated. You must first become discipline. Discipline is not something you're born with. It's something you work on, like your muscles. You got to hit this thing up every couple of days, every day of the week, if you will, to build that muscle, to build that, to build that capability. You have to work on becoming disciplined. You have to work on becoming educated. You have to work on becoming experienced. This work happens first. And it is this work that transforms who you are. Then you take the transformed you into the market, and it is that transformed you that starts producing progress. But if you think that you can stay who you are without putting work into creating the change you need in yourself, if you think there's just, I take this 2-day course and I go into the market, 2 days, it's not enough to change who you are. Take this 2-day course, go into the market, open up an account, and I should become rich in the next few weeks, then you should really find another freaking planet to work on, because you are living somewhere in outer space, not here on planet Earth. I don't know about any other planets, but that doesn't work here, not on planet Earth. I have yet to do intergalactic travel. I'm waiting for Elon Musk or somebody to make that possible. But until then, I only know what the situation here is on planet Earth. This industry has a 92% failure rate, largely because people don't want to go through what it takes to become someone different first. They want to stay who they are and take who they are into the market and take money out of the market. It will never happen. My mother used to say, Oliver, never say never. Oh, never say never, Oliver. Well, I'm telling you, Mom, sorry, never. Let me say it again. Never. All right, guys. I know I'm silly, but it's a point worth. I'm telling you, it's a point worth belaboring. All right? 92% failure rate. Get it locked into your head. Most people know nothing about financial markets. They think they do. Oh, well, the market goes up and the market goes down, right, Oliver? That's it? Yeah, that's pretty. Most people know nothing about financial markets. That's a con. Here's another big one, guys. Success comes after experience, and experience takes time, years. You can't be an experienced trader in 2 days. You can't be an experienced trader in 2 weeks. You can't be an experienced trader in 2 months. Becoming experienced takes time. You can't cheat experience. All right? Anything good that happens before you are experienced is called luck, traders. Only what happens after experience can you claim as yours. Listen to me carefully. You can't become successful before you become experienced. Get this in your head, people. You cannot experience true, real success before you become experienced. True, real success comes after you become experienced. And what's required to become experienced? Time. This is what people do not want to put into this. They want a microwave. They want a microwave results. Can I have my gourmet meal in 15 seconds? No, you cannot. This is the #1 reason why there are so many scams in this industry, because these scammers, right, which even I, believe it or not, have been accused of. Are you kidding me? Putting this truth in your face? How? But this is the #1 reason that scammers in this industry get away with their scams, because they sell you on the idea that anyone can do this. They do not tell you that 92% of the people are going to fail. They do not tell you that this is difficult. They do not tell you that you're going to fail first until you become experienced. They do not tell you that experience takes time. They do not tell you that success happens after experience. And before your experience, you're going to be a loser. The reason why, how many people are in this room? There's 427 people in this room instead of 40,000 people in this room. Do you know why? Do you know why there's only 400 people here instead of 40,000 people? Because I tell you this truth. 92% of you are not going to make it. There's only 400 people here because I tell you that success comes after experience. There's only 400 people here because I tell you that experience takes time. There's only 400 people here because I tell you what's real in this industry. If I went at 40,000 people in this room, I would constantly preach from every podium I can that everyone can do this, that you're all going to be successful, that it doesn't take time. Just follow these 3 things and get rich. I would have 40,000 people in this room. But I will never do that. You learn how to win in this business by first learning how to lose. Can I repeat that for you? You learn how to win by first learning how to lose. What does that mean, traders? You're going to lose first. What does that mean? You are going to become an expert loser before you see a single dollar, before you get winning trades consistently, before you call yourself a success, before you start to support yourself with this activity. You are going to be one of the greatest losing traders you have ever seen. You're going to become an expert at losing. You're going to become so intimate with losing, you're going to feel like this is just your natural state. You lose your way to success in this business. There is no way to win first, because winning doesn't come before your experience. Experience comes after you have lost tens of thousands of times. Guys, listen to me carefully. I get very, very emotional about this, and I apologize. It's just the way it is. It's just me. I get emotional about this because I need all of you to understand this. There is a direct link between how much you lose first and how successful you are later. And isn't it ironic that what all of you are trying to do is you're trying not to lose the very thing that you need to do. The very thing that you need to do now is to lose as much as you possibly can to get the losses out of the way now. You don't want the losses in the future. Just get the losses out of the way. Become so intimate with losing. Become so intimate with every possible error, every possible mistake. Know it like the back of your hand, so that at some point, the market can no longer fool you. The market can no longer trick you. The market can no longer surprise you. You've been there. You've done that. You know every possible mistake that can be made. You know every possible error, every booby trap, every dead end. The market loses its ability to punch you without you seeing the punch coming. How do you get to that state? You become an expert loser. Why is this a con? It's a con because most people don't have enough money to get through the losing period that happens first. First of all, they enter the game with this Mickey Mouse Disney idea that I'm supposed to win from day one. This is not Disney World. I'm sorry. This is not a Disney movie. This is real life. It is impossible for you to win until you become experienced. And it is impossible to become experienced until after you have become the #1 expert at what? Losing. How does a baby learn to walk? By running first? Wait, I'm going to learn to walk by sprinting first in the Olympics. Then I'll learn to walk later. No, a baby learns to walk by first trying to stand and falling. Standing, falling. Trying to stand, fall, 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 fall less. Fall less. Stable, don't fall often. Take a step, fall. Take a step, fall. Take a step, fall. Take 2 steps, fall. Take 2 steps, fall. Take 3 steps. Falling, 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 until the baby becomes so intimate with falling and all the reasons for falling that he naturally starts to avoid the reasons, but not before becoming intimate with every possible way to fall. Doctors tell us that parents who overly protect their children from falling wind up with clumsy kids. Zero athletic ability because they weren't allowed to fall enough. You lose your way to success at this business. Why is this a con? It's a con for 2 reasons. Number 1, most people start off with a tiny bit of capital, and then they lose it because the first period has to be lost. The first period of a baby learning to walk has to be falling. You're always bad at something in the beginning. Always. First time you pick up a basketball, you're horrible. First time you put a golf club in your hands, you're really horrible. My golfers out there know that. The first time you try to kick a soccer ball and control it, you're horrible. The first time you try to walk, you're horrible. The first time you try to talk, you're terrible at it. You are bad at everything you start off, but somehow when it comes to this activity called day trading, that all of your common sense leaves your God-given head for some reason. And for some reason, this is the only activity that life is supposed to be different. No, I'm supposed to be good at this from day one, right? Really? You don't apply that common sense measure to anything else in life. But when it comes to this, you expect to be good right away. You expect not to fall. You expect not to lose. You expect to make the ball in the basket every single time. The first time you pick up a basketball, really? How can that be? Why is this supposed to be the exception to you? You're going to be bad at this. You're going to lose your money first. Absolutely. You're going to fall first. It's just the way life is. Again, I don't know about life on other planets. We're still waiting. But life here, you lose first in everything. In everything. Do you understand what I'm saying? Are you picking up what I'm laying down? Am I talking too much? I am frustrated at the level of naivete, and I am frustrated at, I'm frustrated at the lack of common sense when it comes to my industry. I'm not here to sell you on some pipe dream. I'm here to speak some much needed reality to you. This is not easy. But I, for one, am glad it's not easy. I don't want to be a master at something that's easy. Oh, I'm a master. Did you know I'm a master at walking? Oliver, what's the big deal? Everybody can walk for the most part. I don't want to be a master at something that everyone else in the world can be a master at. I want to be a master at something so difficult that most people say, oh my God, really? How did you do that? Can you talk to me? Can I take you out to dinner? You want this to be hard. You want it to be difficult. You want it to be challenging. You want to be special. You want to be the minority. Who wants to be the majority? You want it to be difficult, but at the same time, don't be naive and think that it's going to be easy. It is not going to be easy. It is not. But at the same time, be glad it's not easy. Because if you happen to make it, oh my God, you are truly special. You're the 8% and not the 92%. And that should be your motivation. That should be your goal. I want to be the 8%, and I will work at being the 8%. I will put the work in. I will put the time in. I will become experienced. I understand that I'm going to lose first. I understand that inside of every single loss is the seed of a future win. I understand this. Losing comes first, Oliver. I understand this, and I will work on perfecting my losing until I lose less, and until the vast majority of those losses go away. You have to be willing to do that kind of work and have that kind of determination at this. Otherwise, you're wasting your time, you're wasting your money, and you're proving every naysayer right in my industry. You know what the naysayers say? That this is not for you, that this is stupid, that this is gambling. They call my industry a fake, a scam, and it's not. But you, many of you, make them right. You turn this game, this professional game, into a casino because you're gambling and you're not trading. You play this game like it's a Disney movie, like you can all of a sudden, somebody can wave a wand and you're all of a sudden a successful trader because you took a 2-day course from somebody. What? A 2-day Disney wand to become successful. That the real world doesn't operate like that, traders. I'm sorry if I get so animated, but incredible. So like I was saying, I think that getting guys, I think that getting some of these things out of the way, we're tackling some of the major misconceptions here. No one will understand you. Listen to me. I'm going to repeat this. No one. No one. If you do, consider yourselves extraordinarily lucky. But in most cases, no one is going to understand you until you make it. No one is going to support you until you make it. Sometimes you'll be in a situation where the person you go to bed with every single night is your enemy when it comes to this. The very people you love and want to support through this activity at some point in the future will despise your passion or dedication to this. Whether that be your parents, the love of your life, your children. Many of you are going to find yourselves every single night breaking bread at the same dinner table of people who look at you and call you under their breath stupid. This was my world, where I was ultimately abandoned by the people who loved me the most because I wanted to do nothing else but this in my life. You're going to be misunderstood. You're going to be despised. You're going to be ridiculed. You're going to be rejected. You have to live through all of that. Is that a pro? No, that's a con. Because somewhere deep inside, you're going to have to push through all of that. You're going to have to stand on your own 2 feet without anyone helping you, without any support whatsoever. Again, if you happen to be one of the rare people who has that support, consider yourselves lucky and pray to your personal God every single night that they don't turn on you. Because at first people supported me, but later they didn't. Only thing that's going to shut these people up, the only thing that's going to change their mind is you becoming the 8%. That is a con, ladies and gentlemen. Another con, it takes money to trade professionally, guys, $30,000 minimum. This is another huge misconception in this industry. There's a huge difference between retail trading with $500, even $5,000. Retail novices trade with $500, $5,000, $10,000. Novice novatos.
All right, I'm going to cut it off there because he's not. I mean, this is dated information, and a lot of things have changed. But hopefully, you understood the core of what Oliver was talking about. All right, it all makes sense, right? We all want to. We get mentors to shorten the time frame that it takes for us to go from trying to figure out to profitable, right? But I think there's a disconnect between what people can teach us and what we have to do as individuals. 2 different responsibilities. You rely on someone else to understand how the market moves, but I mean, you can learn that in 6 months. If you have a Fibonacci, you understand that there's an impulse move, there's a pullback, and the market goes to where it's going. That's easy. I mean, you can teach your baby that. You can teach anyone that in 6 months. What you cannot teach people is to be disciplined, right? I can ask people to a T what should happen, and they can regurgitate the information. But they're not disciplined enough to wait for the trade and then take the trade. That's it. That's it. And you know, I'm not any different. You know, I struggle with discipline the same way everybody else does. I think the difference maybe I work on it. You know, it's a continual thing. Like Oliver said, you know, you just like you go to the gym, just like you study your Bible, just like you're in a marriage. You know, you don't get married and then just it works. No, you go to work in that marriage or that relationship with your significant other, the relationship with your children. It's the same. You're always going to be the parent, but the relationship requires work. Trading is the same way. And just like your relationship, you know, if you want to just put a little effort into your trading, your results are going to show. The people with the greatest results, go ahead and assume that those are the people that put in the most work. And that's just the way it is. There's no shortcuts. There's no hidden lies. You know, you can pay for a signal service, $30, $40, $50 a month. You can give somebody money to do a signal service. And if they put a lot of effort into their signal service, maybe you'll have great signals, right? The problem is when they disappear on you in 10 years because they've made $10 zillion off the signal service, and they don't need to do it. The life that you've built throughout that signal service is now gone. Now you got to find somebody else who's giving signals. And right now you guys have the ability to be able to generate your own signals for FREE. Let that sink in. FREE, right? Those of us who come and try to disseminate the information on a weekly basis, we're not getting paid for it monetarily, but it's paid me in ways that you can't even imagine, you know, because I have to go and research these topics. I have to watch 10 videos in order to be able to bring you one. So through me doing the research, I mean, it just opens up so much more, you know, and your knowledge expands rapidly. So it's all a matter of putting in work. And, you know, maybe you're the type of person who can now see the market, but you can't execute yet. All I can tell you is keep fighting the good fight, right? There is a way that this doesn't cost you money, and that's through a demo account. The problem with the demo account is you can throw a 12 lot in there and you have no emotional attachment. You don't care. It's 12 lots. Whereas in real life, you can't even put a lot on a trade because the numbers might scare you. That's where you're going to get the value from trading real money. But don't be a fool. If you're not ready to trade real money, stay in the demo. It's easy, right? And what I would always challenge you in this game, I even do it these days. I go back and I look at moves that maybe I should have taken or moves that I think would have happened, right? And you can do that via back testing, right? And what I mean by that is if you understand price relation, like prior to the Zoom this morning, me and a few people were on here, and you just go back and you look when candles close, the next candle, the wick goes, and it should touch the wick of the previous two candles, right? So every third candle, the wicks need to touch. And if not, it's going to leave an imbalance or a fair value gap. That's okay during news events, right? News pushes the market a certain direction, right? So that's when you get your expansion. But then you want to see the retracement come back and clean up those imbalances. That's all we're waiting on. So if you're a trader who understands these concepts, right? You may not understand it down to the nth degree, right? You may not understand it like I understand it. But when you look at a chart, you understand that every third candle, you need to see wicks touching, right? Here's a wick. Here's a expansion candle. This wick should have came up to touch this wick. It didn't. So in the future, you're going to see the market push up into this imbalance. And eventually, this imbalance will be closed, right? This candle pushed further into the imbalance, but there's still this much imbalance left. So what do you think is going to happen when the market opens this week? Price is going to push up. It's going to mitigate all these imbalances, right? And price is going to go up to a certain level. You can find that level on a Fibonacci, right? Even if you don't understand the imbalance talk, if you're a support and resistance trader, you have support, right? Price breaks support. What do you expect to happen? A retest or a retracement, right? Call it what you want to call it. This is just how the market moves. Break, retest. For me, I might not call this a break and retest. I might call this the market going back, mitigating imbalances. However you see the market, it's fine. Maybe you're looking at a RSI and it's oversold down here and needs to go up. All of it's the same stuff. It's all the same. The market's going to go up. It's going to mitigate the imbalances for me. It's going to reset the RSI for you. It's going to check out the break and retest for somebody else who trades that way. It's all the same information. Just depends on who's telling the freaking story, right? But if you're a disciplined trader, then maybe you recognize this retest, this RSI reset, this imbalance mitigation. You recognize the fact that it's worth 140 pips. That's all that matters to me. I recognize the fact that I can get 140 pips out of this move. So I'm interested in taking this move and collecting my 140 pips. My whole trading week is over. I'm good to go. So if you can take the story that the market is telling you and you can trade in order to capitalize on this story, it doesn't matter if you trade smart money, dumb money, funny money, MACD, RSI, it doesn't matter. All you have to do is figure out the method that works best for you, right? I was listening to ICT, that's where I had my breakthrough as far as the smart money. He made it make sense, right? So he had this video, he talked about making a living off 20 pips per week, right? 20 pips. And, I want to say he stretched this story out, or the way he explained the story. If you collect 20 pips a week, you'll be a millionaire in 10 years or something like that, right? Had a little spreadsheet and everything. And now, the first time I heard that, it kind of piqued my interest. The 10 years, it didn't really do anything for me because, I'm old, I don't want to wait until I'm 60, you know what I'm saying? So I came up with a way where I can make 100 pips a week. 100 pips a week. A lot of times in our trading career and in our lives, you look over and you'll see parallels, right? Because no doubt there are some people on here. We got 35 people on this call. There are at least 5 people on this call who make great money and still live check to check, right? So what I would say to you is this: sometimes it's not the system that's broke. It's you. It's your mentality that's broken, right? If you're making 50K in the United States, you're making plenty of money. And I got it. Some of y'all say, well, I live in New York. I live in this. My dad, man, he used to say these crazy things to me and Sean. I remember one time he asked me, he asked one of us if we could live off $100,000 or something like that. Or maybe we said we needed to make $100,000. And he said, if you can't live off $10,000, then you can't live off $100,000. And it didn't make any sense. It was like, man, nobody can live off $10,000. And that's what he was basically saying is, you got to live off what you make. And if you can't manage the money that you make, right, you'll never be able to manage any amount of money, right? So some of y'all are making a livable wage, but you're spending too much. Your credit cards are too high. Your vision for your life, you're chasing the Joneses. It's never going to work. It's all wrong. Your thought process is broken. And it's the same way with the trades. Every week, if you've been in this group and you've been on these Zoom calls, every single week for over a year, we've pointed out 100 pip moves every week. And whatever personal excuses that we've all come up with of why we didn't catch that move is just that. It's just an excuse, right? And when you first start trying to catch these moves, it is difficult because you don't have a good understanding of how the market moves, where you should look, or anything. Now, Ray Charles, if you've been in this group a year, Ray Charles can see that this is turning around, right? So all of us with a pulse who've been in this group know that this is going to buy it. We know, just like we know that there are calories in cake. There is no question. And still, at the end of the week, some of y'all aren't going to have 100 pips. Let that sink in. And you see that this is going to buy. EA is the same way. You can see it. I haven't done anything technical as far as breaking out, you know, a position tool and trying to find an imbalance in this up move. None of that. I've done none of that. I can just look at this chart and see where the price flattened out. It was going down and it got flat. We know it has to pull back and it's going to pull back. There's the break right there. I didn't do anything technical in here as far as the imbalances. I just drew a line where I see, okay, support. This is support. It broke. Now it should be resistance. That's 140 pips from where price is now to the touch, well over our 100 pips. But some of you will not have 100 pips to your name at the end of the week. Some of y'all will catch this move. This might go 160 pips. You'll have 160 pips, then you'll give away 90 pips on the next move. You'll lose a trade, cost you 90 pips. Again, that's your fault. You overtraded. 100 pips, you should be done, period. Because if you can collect 100 pips a week, you're a millionaire in way less than 10 years. Now, I want to say, Selena, you can correct me if I'm wrong, but probably less, or right at a year, or a little bit less than a year. You did a spreadsheet on 10%. I don't remember, 25 trips.
Yeah, it was 25. Yeah.
So let that sink in. Most of the time, it's not the system that's broke, it's the mentality that's broken, right? We have a community, right? The thought process behind the community, just like when you were kids and you hang out in the club, or when you were, you know, when you played basketball, you hang out in the gym, you play baseball, you hang out at the baseball fields. The community of traders, we hang out with traders, right? I can pick your brain. You can pick my brain. There's a setup. It's not just for getting trade setups or signals, right? It's for maybe your understanding, maybe your edge, maybe how you view the market. Maybe you've never heard of 100 pips a week can finance your life. Maybe you've never sat down and done the math and like, how do I actually make said percentage? 10% is a ridiculous percentage, right? Maybe you just want to make 3% a week, all of which is okay, right? There are accelerated accounts. There are conventional accounts. There are rapid accounts. There are aggressive accounts. There are a million different ways to get funded today, right? When I started trading in 2020, many of these weren't around, right? FTMO came along and that was the only way to get funded, 70%. Now you get 80, 90%, right? The accelerated, you get 50%, but it's actually a lot better than those other accounts because you get paid every week. So if you think about this, right? And if your mentality doesn't trip your feet up, right? If you just stay focused and stay in the moment and just catch this 100 pips, and then you wait for a week and you catch another 100 pips, you can understand how you can put that together, percentage, you're compounding percentages and you're advancing accounts. It is only your mentality that is holding you back, right? All you have to do is figure out how to take this trade to the top, right? And there's a rudimentary formula that you can do to take the trade from where it is right now to the top. Now, first of all, you have to have a Pip calculator because EUR and NZD doesn't calculate on the dollar, right? But if you just take the dollar formula and you say, okay, I have a 35 pip stop loss and I'm trying to get 141 pips. I'm going to make 4%, 3.9%. As long as you take, let's say you're going to risk $100. You have a $10,000 account. Is that 1%, $100? Or is that 10%? Okay, $100 is probably 1% of a $100,000 account. I can't do the math in my head right now, but let's just say you're going to risk $100 on this position. You take your $100, divide it by 35. So 100 divided by 35 is roughly 100 divided by 33 is 3.3, right? So we'll say 3.1. $3 0.31 per pip. That's 0.31. So you take that 0.31 lot size and you go 141 pips. So $3.10 times 141, that's how much you're going to make. Trade is over, week is over. You go into the next week, wash, rinse, and repeat. If you can stick to that math and that way of trading, you'll be very, very successful 10 weeks, 12 weeks from now. But most people can't do it. You can't do it. It's not that you won't, you just can't do it. Because instead of taking this 3.1, you'll work the first week, you'll take that 3.1. And the next week you'll say, you know what, I'm gonna do a 6.2 so I can cut that in half. And then you'll lose that trade. Right? So most of the time, it is you that has the broken mentality. It's not that the system doesn't work or the market makers are jacked up. No, it's you. And it's the quicker you understand that, the better off you will be, right? Another thing that it's you in is sometimes the blueprint is right in front of you. The map is in front of you, but you want to use your own navigation. And that's going to cost you, you know, and I don't want to discourage anybody from doing it your way, but sometimes you should just follow the yellow brick road. So just let that sink in and understand where you're trying to go and be honest with yourself. Do you have a map to get there? You know, if the answer is yes, be encouraged. Take your map, you know, work on your discipline and do what you do. If not, why don't you pull somebody to the side and be like, hey man, I need help with this. I'm trying to get here. How can I get there? And that will shorten the time it takes from you to go to point A to point B, right? There are several sections in our Discord. You know, hopefully y'all are using those sections, the education section, the funded page. Kim, did you set your page or your section up?
I didn't yet.
Kim is gonna, I can put Kim on the spot. She's gonna set her little section up for y'all to draw those ugly trend lines and stuff on y'all charts. I don't like seeing them. I don't like seeing them in text. No, seriously. You know, this just kind of helps you know, sort things out. And maybe it's information or it's videos that, you know, that Kim's flock, you know, the Kimites, the little Kimites follow that she want to drop in that section. You know, TT has her her crazy information in her section. And you know, now we'll get the quarters theory. So if anybody else, you know, like really, I would love to hear from people who scalp, you know. I've yet to see any scalpers. And I refuse to believe that this big old group that there aren't any scalpers. I'm more of an intraday person now. I came in as a swing trader, but I really like to push down on the time frames. Like, you know, well, hopefully Rod will start sharing, King. You know, you got to let Rod come out and play every now and then. But I would really like for scalpers to share, you know, their method, you know, what works, what they look for, you know, kind of like Doyle. Doyle does scalping on the 5 and 15-minute chart, right? And I know how to correlate the time frames down to those levels. But you know, the people who scalp generally start on a lower time frame, and they don't have to go from such a higher time frame. So looking for people to come up and share, you know, their information on these weekly calls. All right, so did anybody have problems with trading last week? 35 jokers in here.
I did, but we could do a one-on-one. I'll explain.
Who did?
That was Isha.
So you had problems last week.
Yes, I did.
Did you see my note prior to the week?
No, I didn't. I saw it after.
Do you understand what you did wrong, or you still need a one-on-one?
I
Let
feel
me
like I just keep making the same
let me
mistakes,
ask you a
so
different
I'm
question.
trying to
Why-
figure
why-
out
Isha,
why.
you can do it on here, so
Well, listen,
every,
yeah, why the reason why I would rather you do it here is because more than you have a problem, but people don't want to be on Front Street. You know what I'm saying?
Oh, I don't mind being embarrassed, especially
Well,
when it
it's
comes
not.
to my money.
I don't think you. I don't think you should be
I don't feel that
embarrassed.
way.
I just think that I think that people need to see what other people's issues are. Maybe they're struggling with the same thing.
Okay,
Do you want to share your screen, or do you want to talk about your trade?
okay, hold on. Let me see if I could pull it up. So me and my UJ, and I did UJ and CAD JPY. So where we at? Did I delete everything? Let me see. All right.
You traded them both at the same time.
Yes, I did.
I would like to ask why.
Because that's where eventually I want to go. So I've been trying to trade like where I'm doing multiples. So that's why. So I'm thinking maybe I need to start. So I did my analysis on 4 pairs. So really by the time I got to the 3rd pair, I was tired and I was in a rush. So I already know I didn't take that trade. I wasn't taking the trade anyway. So I stuck with CAD JPY. I was looking like they're gonna move the same way, and they did for the most part. CAD JPY did it's 100. UJ fell short, but I wasn't watching the charts. And that's just because I'm just trying to stick with holding my trades. But that
Okay.
fell short like 5 pips. And I got in like after the overnight run for a buy.
So you got in late. Are you going to share your
Yes.
screen? You want me to pull it up?
Yeah, I could. Yeah, I could share my screen, although it's colorful. Hold on. Screen. All right, I'm trying to figure this out on Zoom, and I've done this before. Maybe. Okay, there we go.
We got action. We got action.
It's moving. My internet is really slow. Great. Oh, there we go. Mhm. Okay, did anything come up?
Yeah, CAD JPY.
Okay, great. All right, let me get in there. All right, yep. So let me get on the hour. I must have deleted these where I got in at. I don't even know.
By the hour though.
Because I'm trying to get the smallest stop loss.
But take us through your analysis of,
Oh, okay.
or
Hold
why
on.
you chose to get in here or whatever.
Why I chose to get in there?
Yeah. Were
I think
these
it was
buys?
around.
Were they buys or
I was
sells?
buying. It was
Okay.
a buy. I did a buy. So I got the buy from whatever, where was it that morning? So I try to set my trading time. So my trading times is from my 6 a.m. I'm in Texas to 9 a.m. Yeah. So those are my times that I try to be in the market and find trades. Where we at? Sunday, Monday. Okay, I'm on my iPad, so not as nimble as I am when I'm on my computer. So I took it 6 a.m. that morning. Then it's Sunday, so I did it. Mm, mm, mm. Monday. There we go. Doesn't make any sense. I know I took it Monday morning.
Monday.
Yep, I took it Monday. So it couldn't have been Sun. I don't think I did it Sunday because I got in late Sunday. So I know I took it Monday morning at 6 a.m. So this must have been. Oh, I forgot. They're probably a little off. I can't even remember where I got in at. Let's see. What is this? Let me open my phone and tell you what price was at when I got in. Mhm. Yep, so 01. My goal was 101.36 and my stop loss was at 100.76 time. So let me see what time that was. Mm. Now, when I saw it, it had I must have been on the 15-minute then when I entered this trade. Let's see. Maybe that's what it was. Okay, so that's what I saw. I was trying to figure out what time frame I entered on. So I watch it on the hour and I enter off on the 15. And that's just because I want the smallest of stop loss. So then it was over here.
I can't see where you're talking about. I can't see your cursor.
Oh,
Now,
hold on, I'm about to move it. You see it moving?
yeah.
Wednesday, Monday. Where's Monday? Hmm. Oh, this is. Okay, so me and this thing is not working. Maybe we're gonna have to use your screen because I am not maneuvering this well at all, if you don't mind. Oh,
Okay.
there it is. Okay. Yeah, go ahead and go get on your screen.
All right. Let me
Let me unshare. Okay, so it's about 6 a.m., 6:30 in the morning on Monday.
Wednesday, Tuesday, Friday, Monday. So it will be over here somewhere. 9,
Mm,
8, 6, right here.
Yeah. So I dropped down to 15 minutes and
Was the 6 o'clock candle already there or
yes, so by 6:30, the 6 o'clock candle was there.
and where's your goal?
The imbalance. So there was a imbalance, or no, the goal was the 27. The 27 in the imbalance.
So
That's what the
from
goal was.
this move right here.
Uh-huh. Yes.
So this right here,
Yes.
10125.
What I put in, 101, yep, 0.36.
What was your stop loss?
100769.
What was your entry?
Wait, no. This is, why does these have 2 different days? Oh, I got out that day. So my entry,
Yeah.
my entry is on the 15 minutes. So wherever price was on that 6:30, I just saw the imbalance.
But it should tell you on your MT4 where you enter.
It does. Okay.
Yeah.
Hmm.
If I was setting this trade up, this is
Stop
kind
loss, take profit.
I think you should have entered at 10175 and your stop loss should have been at 100.68. Like, so you should have had a 6.5 pip stop loss according to this OB.
Okay.
Your risk reward should have been 9%, which is great.
Hold on.
Was this your trade setup?
That's what it looked like. I'm about to get on my computer. Here we go.
It's a really good setup.
So Tuesday. Sunday. Oh, that's this thing. Okay. So I mirrored the same thing on UJ also.
Right, but let's talk about this one
So
real fast.
yes. Okay.
So I think the setup is great. Your order block, you got it on the 1 hour. If you're taking the setup off a 1 hour chart though, you really you got to drop 2 time frames down, which is not the 15-minute. It would probably be the 5-minute,
Okay.
but it would probably lay you to the same spot, right? This order block. So you're waiting on a push down to the order block.
Mhm.
Your setup based off this 1 hour, your take profit probably should have been shorter on the negative 27, or depending. I don't know what you saw on the chart, so maybe you saw something over here that told you price was going to come higher than this. But if you're just doing it off the fib, then I would kind of worry about that. So maybe you need to check these highs. Let me see where price is at these highs. I'm going to put another one right here where this previous level was. Okay, it looks like you targeted that previous level, which is cool, right?
Mm.
So I mean, it's fine if price goes there, but in my opinion, when you target past the negative 27, sometimes it can be overly aggressive. In this case, I'm sure it worked out because price pushed up. Boom, easy money. So you could have gotten the negative 6-1, great trade. If you're going to find your setup on the 1 hour, but drop 2 time frames down, like to the 5 minute, you know what I'm saying?
Okay. I will start
But
doing
you said that one worked out for you?
Yes.
The UJ trade didn't?
No. But that's, I mean, it's like, as always, I keep doing the same thing. I get in there too late. Now, if I saw it last night, but I didn't want to trade, not last night, but on Sunday, I would have got in on the trade on Sunday, which I like getting on trades on Sunday, but I'm trying to change my days to where I trade Monday, Tuesday, and Wednesday. So I'm
So
doing
how
a
come
new schedule.
how come UJ didn't work out then? It's the same.
It was a couple pips below. It didn't go all the way. It was like, let me measure that. It made
I'm assuming that this is where your setup came from.
3.6. Yeah.
Came to your golden zone. It went to the negative
Mhm.
27.
Yeah, but it was about 4 pips. Yeah, it was like 4 or 5 pips.
So you targeted this up here?
My target was, where is it? Was the 0.37. That's where it was supposed to go. I have an alert there.
Wait, what it
After-
no, what it on your I don't know
Oh,
what
here, my MetaTrader. Hold on. Let's see.
well, you probably won't see it. You probably just see where you got taken out.
Yeah. I think, let's see, stop loss was supposed to be 136.85, and no, that's the wrong one, I think. So this must have been it. The one, that can't be it either. Okay. So this is 136.858. Okay. That looks like it went. Oh, maybe it did go. Okay, maybe it did go. All right,
Yeah,
so
there's
it
no way
did go.
this trade didn't
Yeah.
play out.
Yeah. Okay, nope. I was looking at the wrong thing.
Unless you was
I was looking
targeting
at when I
here.
closed.
Yeah, so
No.
all I
Okay,
would
never
say-
mind.
all I
I
would
was
say
sad for
is
no reason.
if you're taking these trades based on your if you're taking these trades based on this pullback, your target has to be the negative 27.
Okay.
I mean, if you're just taking it based on the fib reading.
Yeah.
And what I think is once you get that, in fact, let me mark the order block on the 1 hour. When you drop down to the 5 minute, you understand that your trade can come back and take place at any one of these levels. I probably, because this range is so small, if I'm not being greedy, I would just use the entire area.
Okay.
The entire area is like a 13 pip stop loss. But if you're just being greedy, maybe you want to target this imbalance to the 27th.
Okay.
The only way that this trade doesn't play out is if it doesn't tap you in. This is a 6% trade.
Okay.
So it tapped you
That
in.
no. Mhm.
Easy money.
Yeah.
6% right there. So
So no, that's what I did. I lost the next day. So the 1st of May, I got it, and then the next day is when I made CAD JPY and lost UJ. So that it was the next day.
hopefully you were selling that day and not buying.
I was buying.
So okay, so this
I should just not take the trade. I mean, I did win the Monday trade. So
yeah, you won two trades.
Yeah.
They should have put you over 10%. There's one position. This one was a 6%, the other one was a 9%. There's no way you should have been done. In my opinion. If you don't have an off switch, then you know, it's gonna eventually hurt you. But the next day is when, well, maybe it was Wednesday. It was Wednesday they started selling. So I don't know what your setup was that second day. But just for anybody who's watching, if you're taking trades on any time frame, you have to make sure you're not overzealous of your target. And in both of these, she got plenty of extra, but you still have to pull the trigger at the spot where you're supposed to pull the trigger. So this went and then it pulled back. You never know if it's ever going to pull back and touch your beginning again. So at least take partials. If you're going to leave a runner, you know, that's cool, but you want to at least take your partials at the spot that the market is demanding that you do, right? Do I have any questions over this setup? Did you want to look at that next day, Isha, or are you good?
Okay, yeah. Let me pull up the next day. Next day, my stop loss was the 100.26, and my take
What day was that? Tuesday at 6 in the morning?
Tuesday, yeah. About 6:30 or something like that.
There's Tuesday at 09. So it was right as the market was turning too.
Mhm.
So I have a crazy question for you.
Mhm.
During the analysis, we said that this was going to sell.
Mhm.
You remember that?
No,
Well, I
no,
honestly
no,
don't
no,
know
no.
because
No.
I didn't do the analysis. Kim and
Mhm.
your girl did the analysis, but when I sent out the trade idea for Tuesday,
Mhm.
I said this was going to push down. But if you just do your own analysis, right? If you looked at your own analysis on this weekly level, if you're looking at this coming in the last week and you see this trade put, you know it has to come down here and tap in, right? This
Yes.
next candle has to come tap in.
Yes.
So me personally, I'm not trading it up. I'm waiting for the move down. And here's the reason why. The move down is 109 pips. Maybe it goes up 40 pips. Maybe it goes 60, right? But I don't have the market. I don't have an advantage over the market if it pushes up here. The advantage that I have over the market is when it turns around to come down. I know exactly where it's going.
Right.
So this is why I said wait until you get a bearish 4-hour order block last week, because you can see the market went up and then it came down. It had to come here. The advantage that you have as a trader is when the market turns around, you know exactly that it has to come down here.
Okay.
Now, I got it. It might not be on your time frame, but in my opinion, that second day, no, I'm not trading this up. The first day, I got it. Okay, it went up. You know, you were early, so it didn't hurt you. But that second day, when I understand the market has to come down, on the higher time frame says the market needs to push. I'm not trading it.
Right, right.
So
Okay,
I think that
I
going,
get that.
you should. I know you trade on the lower time frame, but you have to look at the higher time frame to kind of see, right? Like to understand that, okay, now I have to trade different. And
Okay.
I mean, what are the odds that you caught this right at the top? And if you had looked over here, you see a daily order block over here. So if you had framed your market prior to you even taking any trades, you probably, I don't know if you would have taken that first one, but you would have understood that you're in an order block. Or, you know, if you trade supply and demand, you know, you're in a supply zone. So you can expect a push away from the zone on the daily level.
Okay.
But you know, it's good setup. I would use the hour and then the 5 minute. It's going to give you a better risk reward.
Okay.
Not that you hurt me with that, because you know, I think you're kicking butt.
Okay. Thank you. I will write that down. Oh, yeah. Well, that's it then. Thank you.
Okay. Thank you for sharing. Somebody asked about Nas. What about Nas?
That was me. I just wanted to know where you would have gotten in for Nas.
Well, first of all, I want to point out that I didn't get in for Nas. No, let me see. All right, so Nas, I would have expected for it to sell, right? Last week. In fact, it did sell, but let me see. Here's why. This was what we looked at coming into the week last week. So I'm going to fib this candle. And I'm going to expect for Nas to push down to my zone. I'm going to look at the 4-hour. And here's my zone. There's an imbalance. I'm going to put a line across this top of this imbalance. I can even drop down to the 15-minute to see what else is in this zone. There's an order block right here on some level. So that's cool. I think that that I can probably trade the market down towards this zone. Now all I have to do is decide when I personally want to enter Nas. I'm not going to do it on the 15-minute. I need to see a break probably on at least the 2-hour, but I'll look at the 4-hour depending on how bad it gets. Now, okay, now I'm ready. I get my bearish order. Let me make sure it finishes at a bearish order block. Okay, so once I get this bearish order block, I'm cool. Now I'm trading Nas down. So anytime after this candle, which is on London session, I could have hopped in for the sale. I would have been comfortable with selling.
So you wouldn't have waited for a break of structure or anything?
But it is a break of structure on the 4-hour. An order block is a break of structure.
Oh, I did not know that. Okay.
If you drop down, right? If you drop down, I broke structure here. I broke structure here. So it depends on you and how you trade as a trader. There's a break of structure. There's a retest, right?
Mhm.
Remember, this is very important when it comes to trading. If you're taking a trade away from an area, right? That area is going to give you an order block. In this case, it was a 4-hour order block, right? This 4-hour order block, when you drop down to the 15-minute, and you're going to see this. Now, when you see this and it creates this huge A imbalance, that is your trigger. This imbalance is your trigger. When price pushes back up into this imbalance, you should be looking to take the sell away from that area. This order block, you see this break?
Mhm.
It didn't leave an imbalance, but you still want the price to come back up into the order block from wick to wick. Once price pushes back into the block, since there's no imbalance, you can take this trade away.
I got a question before you move on from this chart. Can you go up a little bit on the chart? Move the chart down a little bit, yeah. You see that there's 3 candles, 3 red candles at the top?
These,
Yeah, so that fourth one, that fourth candle, would that be an imbalance as well or no?
this is
Right there.
exactly, this is an imbalance.
Mm-hmm. Okay.
The only problem with this imbalance is I have an order block and a huge candle. I'm going to play for the order block. Now, there's nothing wrong with you putting your position and waiting for an entry here. You wouldn't have got triggered. Now you have to look for re-entry. And the way you do that is you just go to the higher time frame, right? So in this case, you would miss that entry because your entry, you're looking for an entry to come back in the wicks. Not a bad idea. It just didn't play out for you. So all you're doing now is looking for a re-entry. There are several ways to get your re-entry, but the way that I do it is, you see this level, you can argue that it broke this structure and you would be correct. Then you got a retest and a push away. But what I would tell you is this push away that broke this structure and left this big imbalance. This is my trigger. I'm drawn to this, not this.
Okay.
Right?
I mean, if I was looking at it, then like on the 15-minute, that would actually be the way I would have traded it. Like the break of structure would be right there for me.
So,
but okay, I see what you're saying.
But here's what we have to understand as traders. I like to take my setups off the 4-hour.
Okay.
I like to take my setups. So when I get my 4-hour and I drop down, I can see what happened in my 4-hour, right? This is part of that 4-hour. So I would see this. This would be available for me to see on that 4-hour. Now, just wait for it to push back up. I'm in there. I probably would have been in there actually at this black line because all I'm doing is looking for 50% retracement into this. Right. So here's what my imbalance would look like.
Okay.
So where would you place your stop loss? All the way above there?
I'm gonna show you. So this would be my position. I would cover that order block and I would roll with wherever I thought that and in this case, I would have probably traded it to this line first because I would expect the reaction. But that's plenty of room. That's a 3-to-1 for me, right? With the understanding that I'm expecting Nas to push down. You know, I don't hang out in Nas, but if I did, this is what I would expect that move to look like. And I don't know if it would have played out for me. See, it would have wicked me out. But this 4-hour order block, if I would have got right back in right here, and this 4-hour order block would have held. That makes sense?
Okay.
This 4-hour order block, all this is, James preaches this is a hook and ladder. And if you look at our scale, it probably went right back to the imbalance that you picked out on that higher level. So here's the imbalance that you had picked out. It went right above there. It actually went to almost to these highs. It went to an order block or an imbalance in this wick. So you would have probably gotten stopped out as well. But once you saw this push back up, James calls this a hook and ladder, right? It pushes down.
Yeah.
It comes back up to grab liquidity. So I would have gotten stopped out. I'd have got right back in. And I would have put my stop loss above this high because I understand that that's just a liquidity grab. And then I would have rolled it down. I probably would have tried to get 2 positions in this bad boy. But yeah, I don't trade I don't like trading NAS or US 30 unless it is a big joker type move. And here's what I mean. Selena, you can chime in if you want. So if you notice, when you got this order block right here,
I can chime in on ours.
listen, yeah, because it doesn't matter what you're trading. But this
Oh,
is
okay.
this is what I want people to understand. If you take this trade, right, you follow this general rule. If you understand this general rule, if you take this trade, it's not a great look for you, right?
Right.
What you want to wait for is a break of this moving average, right? So if you took
Correct.
this trade to the moving average, you'd have been okay because it would have came to the moving average. But if you notice, when this order block closes and it breaks this moving average, now you go up and if you pick your entry, you don't lose this trade. This is why moving averages, to me, are clutch, right? When your trade closes, when you break the moving average, and you can argue, hey man, this didn't break the second moving average. Well, if you want to wait for it to break the second moving average, then your entry would have been here in this order block, right?
Yeah, okay. I see what you're saying about the moving average. I see what you're talking about now. Yeah. So for me, when it comes to the moving averages, I don't get in a trade unless if it's a bearish order block, the moving averages are on top of it, or if it's a bullish order block, the moving averages are on the bottom. That's just a safety net for me. I know
Right.
Todd will still take them.
It works. Now,
Right.
I'm more aggressive. I would have taken this entry. I'd have been stopped out. I'd have got back in. I'd have been okay. But,
Right.
you know, I don't use stop losses too. So that's another thing. When I say I'm stopped out, my hedge picks up. But my point is this. Most people trade with stop losses. So I'm just trying to give you a nugget of information that can help you out, right? If you have your moving averages on, when you get this initial close and it's on top of your moving average, to me, I'm good with entering the trade, right? When trade pushes back up in here, you get in and it's going to fall down. If you needed to close behind, if you need to see both of these covered up, which is perfectly fine, then you would have got it 2 candles later, 3 candles later. The third or 3 or 4 candles later, you see how it closed below both moving averages? This next candle pulls back, you enter that trade, and obviously the bottom fell out. So your moving averages, I like to use as a guide, right? Now, most people who trade smart money don't have any indicators on here, you know, but because I am in a group that everybody doesn't use smart money concepts, this is a great guide to help you understand where you are in the market and when to trade your order blocks, you know, because here's what I mean. As the market is pushing down, you're going to see that you have bullish order blocks, right? You don't want to take your bullish order blocks. Can y'all hear me now?
You gotta go somewhere where there's.
What the fuck? Can y'all hear me now? I might have fell out of Zoom.
Oh no, just no.
Yeah, my Zoom. Just tell them I gotta restart.